Are you worried that rising interest rates are going to price you out of your dream home this year? Well, we're here with Diamond Dave McLaughlin of NFM Lending, and he's going to break it all down for us. Dave, thanks so much for your time, man. We appreciate it.
Thanks for having me. It's great to be here.
Yeah. So basically, we've heard a lot of talk about, rising rates up in here. And maybe, we were kind of talking even before we shot this video about maybe the cost of waiting. Actually, so can you kind of give us maybe just a brief example, kind of tell a little story about maybe a past client that's been affected in that way?
Yeah, so you don't want to wait. There's never been a better time to buy real estate with rapid appreciation and then rising rates. The cost of waiting is going to cost you thousands and thousands of dollars. So just on a $380,000 home, just before we shot the video, we were talking, and just in November, the rate was 1% lower than it is today. So what that means on $380,000, it's about a $316 per month difference per month. And if you wait even longer, that gentleman was going to wait because he wasn't sure it was the right house,
right.
It had the
Was
right
he
thing.
cold feet?
He started to get a little squirrely, had a little cold
time.
feet, and he felt like he was overpaying. But I said, hey, look, if you wait, we talked about rising rates. In March, the Fed is going to raise the rates again, but they've already raised. So at this point, if it goes up another 0.5%, it's like another $200. So now, just since he's waited in November, that's over $500 per month that he's losing, and that's a lot of money.
Yeah, and I think also, too, we talked about the fact of the double whammy, right? The real estate market is moving so incredibly fast that we're seeing rising purchase costs, right? The price is going up in the home, and then also the price of the money is actually going up. So you're really getting a double hit the longer that you wait. So moral to the story, don't wait too long.
Yeah, you don't want to wait. And you've helped so many people build wealth with their portfolio. And think of all the people that have bought 2 years ago. They felt the same as you're watching this video. They were nervous too.
Sure.
But now 2 years later, they have over $100,000 in equity.
I tell clients all the time that the best deal you're going to get right now is the home that you get today, 2 years from now.
Right.
That's good. You're going to look like a genius 2 years from now.
That's
basically.
correct.
And it's funny, we're going now with all of our past client CMAs, and we're going through with people that have bought in the past 5, 6, even just the past 2 or 3 years. Like you said, they're up so much money. I'm trying to talk to them now about, hey, maybe it's time to refi, pull some of that equity out, and actually go and buy an income property with it and put it to work in another way. So definitely, I want to get your thoughts too on, as far as people that are shopping around for mortgage and stuff. What do you think is probably the most important thing that people should be looking at, as far as what to look for in a lender?
Yeah, the biggest thing to look for in a lender is everyone looks for rates, everybody looks at fees, and that's really important. But the other thing is, getting to the finish line, right?
Right.
Closing in today's market.
That's important for
me. Here in our area, it's 30 days from contract to closing, and getting there on time means something to the seller, it means something to the buyer. You're taking off of work, you're arranging utilities, you're getting moving trucks. So knowing that you can take that to the bank and close is good. So I would check reviews. I have over 270 5-star reviews on Zillow. I'm proud of that.
And Good job, Dave.
That's awesome.
Yeah, 28 years experience. So you get the experience plus the service, and that's what you bring as well.
Well, I think too, I always tell, the reason I refer you to my clients too, it is about that service, right? It is about being able to call them at not so much the banking hours. You go and deal with a big bank, and I'm not going to name any names, but if you need to make a decision on a Saturday or 10 o'clock, and good luck getting a hold of your loan officer outside of traditional banking hours. And when you deal with someone who's a direct lender, it's a lot easier to actually be a more fluid and follow the market. So I don't want to dominate all these questions, by the way. So I know.
Could you give us an update on the non-QM loan and explain to people what a non-QM loan is?
Yeah, what is a non-QM?
Okay, so
we hear all this jargon and stuff here, so we want to break it down.
Great. So non-QM is non-qualified mortgage. And Fannie Mae, Freddie Mac, they regulate the mortgage industry through what we call conventional mortgages for, 5% down, 20% down. So those things kind of fit in Fannie, Freddie guidelines, or what they call the box. And non-QM is things after financial reform and Dodd-Frank, things that Fannie and Freddie don't want to do. So for example, self-employed borrowers or 1099 borrowers, there's a lot of people that are self-employed when they file their income taxes and they go to their CPA. They show less money, so they want to pay less tax, so they don't qualify income-wise based on Fannie and Freddie. So that's considered a non-qualified mortgage, different rules and regulations. And for those borrowers, there's some good news. So we can look at 24 months bank statements, and they'll look at all the deposits going into the bank, okay? And then we can qualify them that way. So we're not using the traditional tax returns. And that's real big if you're self-employed out there or an entrepreneur. Those are great updates.
I saw that recently. There were some changes, right, due to they looked at it from COVID standpoints and how they wanted to see your P&L tracking this current year basically with what it was doing last year. And I know they've kind of relaxed some of that stuff, which was kind of good news.
That's great news. So it's funny you should say that. We were actually jumping around the hooray dance. So when they announced that, we were like, doing cartwheels and backflips.
That you were.
Because I felt sorry for the entrepreneur because it was a pandemic. It was very proportional, but yet the government was holding the entrepreneur accountable, and they weren't giving them any leeway, and they were forced to shut down. But then we were looking at their 2-year history to qualify for a mortgage, but yet the government, you came from California too, and they were shut down. So how do you work when you're shut down? So what they did is they're no longer looking at the profit losses and the 3 months bank statements for businesses. So they're going back to the old guidelines, which is really going to help free up the entrepreneur to buy more real estate.
So speaking of documentation, just maybe there's some first-time lenders out there, maybe there's some experienced lenders that need borrowers that need kind of a reminder. But typically, what are kind of the documents that someone's going to have to put together before they come down to actually qualify?
Great question. You want to start looking at your credit on Credit Karma, getting an idea what your credit is, so that you can kind of prepare to get a mortgage. But then we're looking at 30 days pay stubs. We're looking at your last 2 years W-2s. And then we want to know where the money comes from. So we're looking at your last 2 months bank statements or 401k. And that's great. A lot of first-time buyers don't realize that they can use their 401k for down payment or closing costs. And that's a great tool that we have.
Okay. And then if someone is basically self-employed, you're talking about profit and loss. I don't think you guys really need a balance statement, but typically profit and loss, K1s, anything.
We do. So if you're self-employed, we're looking at 2 years tax returns.
Okay.
Okay. And then we're also looking at your 2 years business tax returns. Okay. And then any K1s. So they want to follow the flow of the money from your business.
Okay. So another quick thing we wanted to just touch on is kind of buying a second home, right? We've heard a lot of different changes in what's going to happen as far as interest rates and stuff. So can you tell us a little bit about that?
Yes, it's excellent. So it's never been a better time to buy a second home. Many people are moving to beautiful, sunny Florida to enjoy the weather, the culture, also the environment. It's an amazing type to buy real estate right now with this appreciation, and you can work remote. So a lot of people are coming from California, and New York, and Boston with these high-paying jobs, and they're able to buy real estate here, which is a little bit less expensive than what it is in California and Boston and New York. So it's a great time. But you asked about second homes and changes. So the change is going to be that as of April 1, Fannie Mae and Freddie Mac are going to raise the interest rate to match the interest rate on investment properties. So if you wait, okay, you're going to pay a little bit more higher interest rate and a little bit more in fees. It's not the end of the world. A lot of people are thinking, I'm going to miss the opportunity. No, it's okay. You can still come April 15th and buy a second home in Florida, and we're going to get you a great deal. So I wouldn't worry too much about it, but all the hoopla is about Fannie Mae and Freddie Mac raising the interest rate on a second home.
But
because right now,
low. It's still historically low.
It's still historically low. So to give you an example, today the interest rate, with the APR is probably 4.5%, paying 1 point, okay, with a credit score of 740. 20% down on an investment. Okay.
So still not too bad. So,
Right.
okay. All right. Well, let's wrap this up. We appreciate you tuning in. If you have any other questions, let us know. We're more than happy to bring Dave back in to get any answers. Again, Diamond Dave McLaughlin over here at NFM Lending. This guy is a rock star. So thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.
That's awesome.